G'day everyone, welcome to the Weekend General Update for the 13th of April. And we saw some major moves on Friday night in precious metals. They got absolutely smashed as the 1550 support level on gold that had held for so long finally gave way. And the fall subsequent to that support level giving way early in the session was really quite dramatic. By comparison, the US market and overseas markets really did very little. Resources were under pressure. Oil dropped by about 2%. Copper was down by a similar amount. So some fairly major negative moves. And it's really hard to be sure and comfortable about the interrelationships between markets at the moment because there is just so much money being printed and so much currency devaluation going on now, with the Bank of Japan having joined in with America and Europe and England, that the old relationships are really breaking down. So we're seeing some very unusual things. So let's have a look at the action for the week. And the S&P index had a very good week, jumped 35 points in total. And it remains fairly strong, but there's some other indicators that money is starting to go back into the bond market again, which are kind of concerning me a little bit. And given the time of year that we're at, it's a perfect time of year after a very, very substantial rally to see a larger correction. Now, I'm not saying it'll necessarily happen this week, but I wouldn't be at all surprised if in the next 2 weeks we see the start of a more significant correction that might last a couple of months. Now, I haven't changed my view at all on the bigger picture for 2013. I still think it's going to be very positive, but we are due for a correction, and to see something between 5 and 10% over the next, say, 4 to 6 weeks would be really the higher probability event, I believe. Now, the ASX 200 by comparison last week rose by 122 points. It was mostly in our banks. Resources had 1 or 2 good days, but generally were under pressure, and they're going to be under pressure again on Monday, that's for sure. American bond yields, as I said, starting to fall again, which means bond prices are starting to rise as money starts to flow back into bonds. Now, if money is going back into bonds, then it's not going into the equities market at the same rate. So that's one of the things that is concerning me just a little bit. US dollar slightly lower on the week, but really it's the devaluation of other currencies, in particular the Japanese yen, which is really holding the US dollar where it has been. Gold absolutely belted on Friday night, and in total gold was down by $105 on the week, and that's the biggest negative week we've seen in quite some time. There was some panic selling in the ETF market, the exchange traded fund market, which then obviously spilled over into the physical market as well. So people wanting to get out of exchange traded funds meant that physical gold was being sold also. Now, to my mind, this doesn't change the bigger picture at all. It's a short-term impact, and whilst there was some significant panic, and we might have a bit more downside yet, it was the sort of panic washout that typically we've seen some very, very good rises in gold. We've seen $200 an ounce rises in gold over a period of a month or two following the sort of washout that we had on Friday night. So I really think there's a high probability we're going to see a bounce back fairly soon. Copper was down to 335, so still struggling a little bit, and oil down to $91. And the oil chart doesn't look all that clever either. I wouldn't be surprised to see a more sustained fall in oil over the next, say, 3 to 6 months, because the amount of cheap energy that they've discovered in America now through shale gas is putting pressure on the other commodities. Coal has been under pressure, and it just makes sense to me that oil is going to be under pressure as well. So I will be very careful about holding oil stocks through the latter half of this year. And this is the spot copper chart over the last 6 months. You can see it's really been on the decline since the middle of February, and quite sharply so, and we're now down at new lows. So let's have a look at some charts. First of all, this is the S&P 500. You can see that there really isn't any sign yet that it's rolling over. Every time the market is sold off, it's being met with some buying. But at some point, I believe this is going to experience a bit bigger correction, and the fact that there are some signs that money is flowing back into the bond market could just be the trigger over the next week or two to see a sell-off in this market. Now, the line here at 1575 was the all-time highs back in 2007. We've broken above that now. It would be not unusual to see this continue on for maybe another, I don't know, 10 or 20 points and then roll over. Now, it's possible that the rollover could be quite a sharp decline because there's an awful lot of people who are long on stocks and long in the futures market. So my view is that it would be better to start pruning back exposure at this stage, maybe get out a little bit early, and you know, there could be a little bit more upside yet, but gee, this is getting to be a bit of a dangerous time of year, I believe, to be heavily long. I'm still extremely positive about the rest of the year. None of that's changed. I just think the next 4 to 6 weeks could be an opportunity to buy some good stocks at even better prices. Now, the Australian market, we are of course still 2,000 points below our 2007 highs, so we are definitely lagging the US market. And you can see over the last 3 to 4 weeks, really we've lagged significantly against the US market. Now, moving to gold and silver. This was US dollar gold on Friday night. It was just a massive move. Opened at 1560 and ended up at 1473. So it was down by nearly $90 on the session. And if we look at this on a weekly chart, you can see broke that support that has just been tested for, gosh, I don't know, 10 or 12 times. So broke it very convincingly. Now the next level down is around about the 1425 to 1430 mark on gold. Gold finished at 1473, so it's possible we could see another $40 or $50 come out of gold, but it is oversold. And if we have a look at some other occasions when gold has been sold off this heavily, probably be more evident on a daily chart. If we have a look at other times when gold has been very sharply sold down, if we have a look at this period here in September of 2011, the price broke down from around 1800, got down to 1550 in a matter of 3 or 4 days, and then very, very quickly found its way back almost to 1800 again. The next time we had a very sharp fall, it was just a short period afterwards. Again, the price fell very, very sharply, but equally rebounded very sharply from oversold. So don't be surprised if we see something similar this time after such a big move. Could occur here, could be down around the 425, 430 mark. But it looks very much like a washout in that the gold market to me. Now silver is actually down to a support level, so we've got very important support down here on silver at $26. You can see 1, 2, 3, 4, and this is now the 5th time down at this level. So if this support level can hold, we could see quite a sharp rally in silver from here, but you want to wait for the signal. You don't want to go trading this on the hope that there might be a reversal at this level. Now the consequence of that sharp move, the support levels in the gold stock indices broke. We had important support here on the GDX index, and we've got to go back a long time to find the next level down. We might see some support here around about $30 on the GDX. The next obvious level down is sub 18, but good heavens, I can't imagine that we could possibly get down to that level. So some very sharp moves there on GDX. If we look at the juniors, same things happened here with broken short-term support. So a rough night for gold stocks, and I would expect that our gold stocks will probably encounter some more selling on Monday as well. So in terms of what to expect next week, equities still looking okay outside of resources, but don't be surprised to see equities roll over and have a bit more of a correction perhaps over the next 1 to 2 weeks. So that's it for this weekend. Cheers.